really want to kick us off. And I know, here in the US, we talk a lot about what this like closing the infrastructure gap means. Of course, when you're sitting there in Canada as well, how are you thinking about an infrastructure gap and really the important role that you play in helping to close that?
Well, thanks for the question. Yeah, the Canada Infrastructure Bank was created and launched 4 years ago with this idea in mind that there's a fundamental problem we face in reinvesting in the infrastructure we need to have the kind of economy and society we want to have to meet our ambitions around climate change, to grow our economies and be more competitive. So the idea is there's a lot more infrastructure that needs to get built than what we've been able to do historically, and you need to put new tools in the toolkit. And the CIB is one of those. The idea being that you can, if you do two things really well, one, draw more private capital into investing in infrastructure projects, and two, put government money to work in infrastructure projects, because infrastructure projects have public benefit and it makes sense for governments to invest in them, but put that government money to work in more effective ways than traditional sort of grants, spray and pray, as they sometimes call it, but in more targeted, focused ways where government money can actually be used as an investment vehicle alongside the private sector. You can start to accelerate our build and close that gap.
I want to talk about more of the collaboration between public and private sector in a minute. In the meantime, talk to us again about sort of the key sectors where you really see investment opportunities when you think about the types of infrastructure that's really important for this day and age.
So when the CIB was created, the interesting thing, of course, is we have $35 billion to invest, and that's public taxpayers' money. So government has a really important role in sort of framing those sectors or priority areas. And that's where we are a public institution in that initial setting. So we were focused on 5 sectors. Those are around clean power, green infrastructure, transit systems, trade and transportation. So that would be ports and trade corridors and trade infrastructure. And lastly, broadband. So those are the 5 sectors. What all of those have in common is they're important elements of increasing our economic competitiveness and meeting our green ambitions. And they're all areas where there is this chance for an interface between public and private. There are private companies in the broadband space or in clean energy or in green infrastructure. And so we can partner with those. So those are the 5 sectors we're focused in. And in each, what we're really trying to do is find those projects that are good projects that deliver public value, but that are stuck. And they might be stuck because they're too risky or uncertain or have really long paybacks. And those are the sorts of things that government money can help solve. Patient capital, long-term capital, risk-taking capital to help pair with that private sector money in those 5 sectors. And that's what we've been doing. And so now, 4 years in, as I say, we're up to nearly 40 projects that we've invested in. About half of those have reached financial close. They're in construction. The other half where we've signed a term sheet and we're now moving towards close. And it's across all 5 of those sectors. So to your question, we've made investments in transit systems and in transmission and clean power. We've made investments in clean fuels and green energy, in broadband, and in trade corridors. So we've hit all of those sectors.
Mm-hmm. Talk to us about some of those new projects that you're working on. I know that you have a lot of news to share with us around sort of new financing, new capital, new investment opportunities. What really is top of mind for you in that sense?
Well, it's interesting, as I said, we're up to nearly 40 projects as of last count. And those are real projects on the ground. And I love your question because it's easy to get lost in numbers, billions of dollars and 35 billion and how many projects across the country, but real stories are what matter. And so let me tell you about a few. So first, there's been 2 areas that I would call almost been base load for the CIB over the last little while. And that's been investing in transit fleets, particularly buses with municipalities, where what we're doing is helping them convert to green. So we had a deal recently in Durham, which is a region here in the Greater Toronto area, where we're investing with their transit system recently. That's one area that's been very helping accelerate that fleet conversion has been a really interesting, almost product line for the CIB. A second is around building retrofits. And, not an area of infrastructure people always think about, but our building sector is one of the largest emitters, and converting and accelerating the conversion of buildings has been really important. So we've been partnering with folks across the country large property owners, people who own portfolios of properties. So we've done things with companies like Avenue Living or Dream, but also with what you might think of as aggregators, people like Johnson Controls or Amoresco, companies that are working in the space and getting buildings to net zero. So we've been doing those sorts of investments across the country. So that's kind of like, I will call that almost the base load. You asked about new things, and there's some really exciting things we've been doing lately in emergent spaces. So as I mentioned earlier, we're close to announcing our first investment, for instance, in a low carbon fuel space. So biodiesel slash hydrogen kind of space. So that's an area we've been working really hard. But the other one that we're really excited was around electric vehicle charging infrastructure. To me, this is like the perfect use case for the CIB, because you've got a business, and we see commercially, I'm sure you do, and certainly here in densely populated places, we're starting to see for-profit models popping up with high-speed charging.
Right.
And that's great. But there's a real chicken and egg problem in that investment case, which is those chargers only really make money when vehicle penetration of electric vehicles gets over a certain point. And so utilization of the chargers and customers who are willing to pay for those chargers get over a certain point. And until you get there, if I'm an investor thinking of building a charging network, I have to think about how many years it's going to take for that ramp up. And there's a lot of uncertainty in that. What's happening with EV vehicle production? How quickly are consumers changing behavior? So you're waiting to see what happens on the vehicle market. And if you're a consumer, you're waiting to see, well, I'd like to buy an electric vehicle, but I don't know that I'm going to have the charging infrastructure that I need, especially if I want to be able to do longer journeys. So there's that, as I say, that chicken and egg problem. In the long run, there's a great business.
Talk to us about that, because I know here in the US, when you think about, let's talk about Tesla, just as a sort of a use case, right? Building out their own infrastructure model because we didn't have a national strategy. So when you think about other EV alternatives, some of the big concern from that consumer end is, where's the charging station? And there hasn't sort of been that national effort, that undertaking. Is that where you see your opportunity to step in?
Yeah, so the federal government here in Canada in their last budget in the spring announced an initiative around accelerating that rollout. And it comes in two pieces. And I think that actually is very instructive of how the CIB works. We're part of the solution. We're not the whole solution. So we're partnering really closely with colleagues in government to look at the market. And so I think where the CIB plays really well is in large scale deployment in commercial areas, slightly more dense populations. I think where government probably has to play a role, is often the case, is in, if you want to get full national coverage, there are some parts of our country, we're a big country, and with not the most dense population. So you're going to have some government intervention in places that probably, not only are they not economic today, but they probably won't be for many years to come until vehicle penetration gets very high. So think of it as a blended program where the CIB is partnering with private sector deployers of EV charging infrastructure to get rapid deployment in our dense areas. And the government of Canada will continue to work on building out the network across the full scope of our country. And we're partnered very closely with our colleagues in government, so where we can work on the private sector element of that, and they can work on the universality, let's say, of access.
I want to fold this into conversations that we have at Bloomberg a lot, which is you have to get a return on your investment, a return on capital, or none of this makes sense. Rates are rising. It's increasing some of the financing costs. It's increasing the rate of return at which you're required to get back to make these projects profitable. How much of that conversation are you having when you think about the impact of higher rates on your business model, on financing, and of course, that important return on investment?
Yeah, it's a daily conversation, isn't it, right now? And so I think we, like everyone in the financial markets, we're watching both inflation rates, but also what we're seeing on the ground in supply chain and in cost escalation of both labor and materials. You know, electric charging is a great example. The charger component, like there's end-to-end challenges, right? We have all the way back from the supply of critical minerals and materials to be able to manufacture chargers and then deploy them, the manufacturing capacity, the labor in the field to install them, and the financing. At the CIB, as I said, our job is to partner with a private sector investor. Let's just stay with the EV charging example, okay? There's a great partner we're talking to about rolling out hundreds of chargers across the country. And they would say, I know that once vehicle penetration gets over X, 12 or 14 or 25%, I will start getting paid back and I will start making money. And they actually have a very basic metric, which is around utilization, percent of the hours that the charger are being used. As inflation increases, as interest rates rise, and as input costs go up, their break-even number just keeps creeping higher. So if the CIB's job is to help fill that gap, actually the need for our money, as rates go up, as costs get higher, the need for us gets even greater. We have to manage the same realities. We borrow money too. We borrow at a lower rate because we're the government, but we still have some of the same challenges. So we have to be responsible investors too. So we're facing some of the same pressures, but what I would say is the opportunity for us to partner, and in fact, the gap we can fill almost gets more acute in times like this.
You also mentioned inflation. And of course, when you think about infrastructure and sort of the classic way that that fits into a consumer's portfolio, it's always been sort of the classic inflation hedge. Now, I know, of course, you're on a little bit of a different perspective of that, but do you argue that your use case is even more important because you do really, at the end of the day, also see yourself as an inflation hedge?
Well, absolutely. And I think that you go back to the very basic premise of infrastructure, right? And it is one of the few truly cycle-proof kinds of asset classes. Infrastructure helps bring us through economic downturn and recessionary periods because it grows our competitiveness, it grows our economy. So investments in infrastructure are really important in times like these. In times that are good, investments in infrastructure are also really important if you want to maintain that momentum, and the private sector often has more cyclically that they're able to put in. So infrastructure is that unicorn of being truly cycle proof. I do think, as you say, the role of the CIB gets even bigger in periods like we're in right now of high market uncertainty and risk, because that's what we can help manage. We can help the market manage. We can help insulate to some extent or share in that risk with others.
We have about 2 minutes left. I kind of want to end on more of a global theme, if you will. When you talk about your role, it's important to note that we're in an environment of inflation, some of which has been caused by Russia's invasion of Ukraine. It's led to a lot of discussions about what was a globalization world now becoming more deglobalized. Where then is your role when you think about in the future, maybe we're not as globalized? When you think about ports, when you think about trade, when you think about farming, do you invest assuming that this is a world that is becoming more separate, different than maybe what we thought a year ago?
I think the challenge, as you pointed out, is just how much uncertainty there is in our world right now. And that's, I guess most investors, and government would be no different, would say it's kind of easy to make decisions when times are good. It's easy in a way to make decisions when times are bad. They might not be happy decisions, but they're clear at least. The time that's the hardest is times of uncertainty. We are living in a period of massive uncertainty, and it's for the reasons you described, but it's also for the climate crisis we find ourselves in, and trying to understand human brains aren't amazing at doing 20 and 30-year thinking in my experience. So it's really hard. I think that the best thing we can do is we've got a plan for scenarios and pathways. This is true on the climate transition, and it's true on our economy more generally. As we build infrastructure, it needs to be resilient to the future. So what do I mean by that? I mean resilient to things like increasing climate risk. So when we build a new port, we've got to think about rising sea levels and risk of flood and fire. So you have to build resiliency in, but you also have to think resilient in the sense of resilient to economic scenarios, resilience to changes in trade patterns. And so we look at our investments in that light. We're thinking about what sets us up with the most flexibility for the future and what's the most resilient infrastructure for the long term. And that's how we're trying to make every decision. Not that that's entirely easy.